Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be discussing Marcus by Goldman Sachs. I made a video covering how to open a high yield savings account back in January 2018. That video is still current, so if you guys do want to open an account, you guys can check that video on how to do it. But today we're going to be going over their updated percentage now. So back in January 2018, they were offering a 1.5% annual percentage yield. Currently here in October 2018, they are offering a 2.05. So that's a difference of 0.55%. So that's what we're going to be covering in today's video. So if you are brand new to my channel, I do make stock market, personal finance, and real estate investment videos every single week, so consider subscribing and hit the notification bell to be notified every time I release a new video. So let's go ahead and get into it. So here, back in January 2018, Marcus was offering a 1.5% rate. So if you invested $1,000, you'd make $15 throughout 12 months. If you invested $5,000, you make roughly $75. If you invested $10,000, you make around $150. And these interest payments get paid out to you at the end of the month, every single month, and it also compounds. So by the end of your first year, instead of getting that $150, you can make roughly $151, $152, just because of that percentage, that change that you're able to compound month after month. Now here, after a 5-year period, Marcus, $1,000 would create $77 in interest, $5,386. $10,000 would become $773 additional dollars there. So though at that time, Marcus offered some of the best rates. I was using the American Express high yield savings account, but they were offering a 1.35% rate. And then I had checked out Ally as well. And this one here, Marcus, offered a 1.5%. So I had looked at their platform. It looked very clean and effective. So I decided to open my account there back in January and have been using the platform now for the past 10 months now. So they've done really well. Now, currently, October 2018, they offer 2 products here I want to talk about today. One being their high yield savings account. That is what I suggest everyone here use. It provides a 2.05% annual percentage yield. So here, if we go ahead and select high yield savings account, it'll go ahead and display us that Marcus offers a 2.05. Chase, not Morgan Stanley, Chase over JP Morgan, they offer a 0.04. This is accurate. If you go over to their website, you can see that their current rates are at a 0.04. Citibank also 0.04, 0.01, 0.06. So almost a whole whopping 2% over what all these traditional financial institutions offer. Now, if you create an account with Marcus, there's no minimum deposit. You can open up the account and you can either choose to fund it at that time or you can choose to fund it another time, but you only need $1 and you can go ahead and move that in there and you can begin to get your annual percentage yield. There's no sort of transaction fees. Initially, when I created my Marcus account back in January 2017, I wasn't fully invested in the market. My wife did not want me to invest, majority of our money, so we left it inside of a high yield savings account. And then once I created my business, my real estate businesses, I moved the cash back out, funded my business using it, and I've been gone back and forth depositing money, withdrawing money, and at no times have I received any sort of transaction fees. Here they have their little calculator, which I sort of displayed here back in my video walkthrough of opening up an account. And if we now deposit $1,000 here in 2018 October, over a year, instead of $15, we'll now make $20. If we put in $5,000 instead of $75, we're going to make $102. And if we put in $10,000 instead of $150, we're going to make $205 of just straight interest. Now again, this compounds month after month. You get paid out roughly $17 and some change month after month over those, maybe a little bit more than that per month. You're going to get $205 after that 12-month period. Now, remember when we looked at 5-year period? 5-year with $10,000 would make you $773. This is our rainy day fund. This is your emergency fund. This is just money that you want to have liquid in cash. That way, if for whatever emergency could take place, maybe you need to go on a family vacation right away. There's some sort of accident in the family. You have to go. You have a blowout in your car. You have to get some new tires. you have that cash available and you're going to be earning some sort of interest on it that is much better than what all those other financial institutions offer. So here we went from $773 to now $1,068. So that is a very nice difference there. Now I have created a spreadsheet here that's going to be available in the description below and also in the comment section. You guys can go ahead and have access to it, and then once you have access to it, you guys can select file, make a copy. This will create a copy over on your own Google account, which you'll be able to edit and adjust. I will be making some updates to this here and there. Currently, this is for a 12-month period, but I do want to add in a slot here where you can add in the years and then put in however many years you plan on holding that cash in there, and then it'll give you the total amount over X amount of years. So currently here with $1,000 here at a rate of 2.05, you're making $20.69. Instead of that $20, you're making an additional 69 cents just because of the power of compounding. You get 71 cents here, 72, 73, 74, and then here with $10,000 at a rate of 2.05. Okay, so it was $17.08, 11, 14, 17. It just compounds and compounds into itself. Very similar to money in the stock market. If you're getting a return of 7% on average per year, and your investment of $10,000 is building up $700 at a time over the course of a year, and then the following year now you have $10,700, and that increases by an additional 7%, and at the same time you're getting paid out dividends that may be buying more shares and reinvesting. It's just the power of combining. But here you're not getting a 7% annual percentage yield. You're getting a solid 2.05% with no risk at all to you, which is very important. I've had a lot of friends and family members. I've had a couple viewers and subscribers ask me, hey, what sort of high yield savings account do you use? I do have cash over at my Marcus account. I still have about 3 to 6 months worth of savings, and you can do your own calculations. What are your expenses per month? Do you average around 1,000, 2,000, 3,000? You just take whatever your expenses are at the end of each month for the past 3 months, an average amount, multiply it by however many months of savings you want to have kept. If you want 3 months, you multiply it by 3, 6 months by 6, obviously. So 3 by 6, you need to have $18,000. If you want 3 months of supply at 3,000, that's 9,000. So however much you want to have in there to just make you feel comfortable. This is just give you that warm fuzzy feeling at night, knowing that if anything happens for whatever reason, you have money that is very liquid. I've moved money in and out very easy. It takes roughly 2 days for the cash to move in and out of the account, but if you're depositing cash within the account and you deposit, say, $10,000 into the account, it automatically appears on the Marcus end with the full amount, $10,000, earning interest from the date of your deposit, and then it does take 2 additional days from that time for your bank to move that money into Marcus, move it out of your account. It is just that Marcus shows it up on their end as having that full amount in the account, earning interest, and then if you deposit on the 15th, you'll make interest for those 15 days until the end of the month, where you'll make either half of your normal interest payout as you would receive, and then the following month you would get your whole amount. So that is their high yield savings account. I definitely think everyone should have one of these. You know, Dave Ramsey says that everyone should at least have $1,000 minimum as sort of their padding, their rainy day fund, and then work themselves up from there. I feel much more comfortable, with my wife and my kid having at least 3 to 6 months of our rainy day fund. This is just liquid cash, and then we have other means of, stuff. So now that is one of their better programs and such. The other one here is the no penalty CD that was recently offered. Started getting offered here about a month or 2 ago. This is their no penalty CD. You lock in a rate for a amount of time. You can lock in your rate for 7 months, I believe, 7 months, 11 months, and 13 months. And the rates here, again, for the next 7 months, if you locked it in, you'd receive a rate of 2.05%. If you locked it in for 11 months, you'd receive a rate of 2.10, and 13 months, you'd receive a rate of 2.15. Now, I am not in favor of using this no penalty CD at this time. I've used CDs in the past when I was younger. Back in 2005, 2006, I was receiving a 5% annual percentage CD from Chase or the Washington Mutual at that time. I deposited some money I wasn't using while I was in the military. It earned me 5% interest per year that I had it in there, and then I just kind of continued rolling it over until the crash happened, and then that fell from a 5% rate to, I don't even know, like 1% they started offering. So at that time I moved my money in 2007, 2008, a little after there, moved it into the stock market at that time, and that's when I began to get more involved in the markets. So here now, why don't I want to use this one right away? So certificate of deposit, you create your money and you lock in for a certain period. As you can tell, we're currently in October 2018. Back in January 2018, they had a rate of 1.5%. Now, October, 10 months later, they're offering a 2.05. That's a difference again of 0.55%. Now, say as rates continue to increase here, the Fed's going to be raising rates in December and again in 2019. Rates here for their high yield savings accounts could continue to rise. And if you lock in a rate here of 2.15% for 13 months and you deposit money in there, yes, you can withdraw it at no penalty, but you're still going to have that account sitting there either in cash or just completely empty with, just earning 2.15%. I suppose if you wanted to take advantage of the no penalty 13-month account, you could create the 13-month account. You can go over here. Okay, so kind of thinking of this right now in my head, if you created the account for the 13 months, no penalty CD, earning you a 2.15%, you could then create the account, move your high yield savings funds over into these 13-month no penalty CED, and you could leave it there up until either the rates for their high yield savings account either increases over 2.15%, where it would kind of make this account obsolete, and you could then move your money out of the no penalty CD at no penalty, no questions asked. There's any sort of penalties. So at that time in the future, if you need your cash out for whatever reason, or if the high yield savings account does move over a 2.15%, then at that time you can move your money out of the CD, move it into the high yield savings account, getting you a much higher return for your deposit. Now, here we can see the differences between our $10,000 deposited at a rate of 2.05 and our $10,000 deposited with our rate of 2.15. We're going to make roughly $11 and some change there difference. So it may not seem like a lot, but if you do this over the course of, say, 2, 3, 4, 5 years, that additional $10 is going to also compound month after month. And by the end of those 5 years, instead of sitting with $1,000 of earned interest, you're going to be sitting at $1,100 of earned interest. So that is the Marcus accounts, both the high yield online savings account and the no penalty CD. I suggest if you guys are wanting to put some cash aside, still make some sort of interest on your deposit, not have it in risky investments in the stock market currently, or if you're in favor of owning some sort of no penalty, no risk sort of you're making still some sort of a return, check it out. I will have the links in the description below. I have no affiliation with Marcus besides using their product. I don't make any sort of commission or any of sorts from referring you guys over to this one. So I just think it's a really good platform. It's easy to use. I get my statements on the 1st of every month, and on the 30th or the 31st I always receive that interest payout, and then it compounds month after month. And I showed a screenshot over my Facebook group. I've made $150 or more now and earned interest throughout the 2018 period that I have used Marcus. So that is it. If you guys do like the video, remember to hit that like button below. Leave me a comment section. Leave me a comment down below as to what sort of high yield savings accounts do you use? Do you use a high yield savings account? Where is it at? Are you planning on using one now that you've seen this video? I highly suggest everyone start one up, especially if you're just looking to save money, not have it in a risky investment, or that is it, you guys. So thank you all for watching. If you are brand new to the channel, I do make stock market, personal finance, real estate investment videos every single week, so consider subscribing. And thank you all for watching. I will see you next time. Have a great day. Bye.